Let's talk about that and more with Prasad Baji, Senior Vice President of Edelweiss Securities, who joins us live from Mumbai. Prasad, thanks so much for taking the time out and accommodating this interview request. Good morning. How do you view the new penalty structure that Coal India has announced? Because despite, the penalty is higher than what we were earlier talking about. Does it have any material impact, you think?
Yes, certainly it is significantly higher than their earlier position. They are virtually looking at a zero penalty structure earlier, and the power producers were looking at 10 to 20%. So here we have a big graded structure ranging from 1.5% to 40%. I think the clear risk is if there is a shortfall in volumes at Coal India, then they start slipping rapidly into 5%, 20% kind of penalties as such, and that is the key to watch. Our view is that coal production in India will certainly, Coal India will be much better volume growth than what we have seen in the last 3 years, but there will still be a shortfall. So we anticipate that in next year, FY14, there will be a 40 million ton shortfall. They will fall slightly below the 60% supply category, and then therefore there could be a 10% penalty level. More importantly, there will also be a loss of incentive because we expect some amount of diversion from the old FSAs to supply to the new FSA. So there will be some loss of incentive and there will be some loss incremental penalty. So there could be 3 to 4% impact on the EPS post-tax. The only caveat can be that if production surprises on the upside, then it can be a better picture. But right now, I think all eyes therefore would be on production, where there has been growth, but I think it will still fall short of target.
Prasad, which was probably a follow-up question as well. Coal India has promised that 65% domestic production. Do you think it is achievable?
No, I think it will be lesser than that. It could be somewhere in the 50 to 60% range. Again, based on where volumes end up, also based on how much inventory offtake is there. At the beginning of the year, we had 70 million ton. Now the inventory has come down to 55 million ton or so. So there has been some inventory reduction, but it obviously boils down to how much more inventory reduction is possible and how much more volume is there. But still, I don't think it's possible to supply to the extent of 65% from domestic sources.
Right. Prasad, in light of the various issues in terms of production, FSAs and TSI filing a petition, what is the view on Coal India right now?
So our view, our structural view is still positive, because what we believe is that into FY14, the volume growth will still be higher than what we are currently anticipating. We are building in around 470 million ton volume for next year. But what news that we are now getting is that in July there has been a high level meeting at the ministerial level between MOEF, PMO and Coal Ministry, and 15 existing mines are proposed to be cleared, and that could be a big jump to volume. So I would say the structural call is still positive on Coal India, but I think it would be tempered to some extent by some amount of penalty and a loss of incentive, that's all.
Also, there's talk about price pooling of coal. What is the likelihood of that being passed? How soon do you think things can happen on that front? And in case price pooling is not agreed upon, what is the potential impact on Coal India?
No, I think our view is that price pooling will have to happen. There is honestly no other viable mechanism, because we don't see Coal India agreeing to import without and take a hit also. So there will be a price pooling mechanism, and it is obviously at the CEA and Power Ministry's end to finalize those modalities. There is definitely my investor and market concern on this, that whether there will be some hit on Coal India, let us say a 50-50% kind of sharing between power producers and Coal India. But our view is that it will be a price pooling with no hit to Coal India.
Great. Prasad, thanks so much for accommodating this interview request. Appreciate you taking the time out. That's an important voice on Coal India. Prasad Baji of Edelweiss. The stock holding out in today's session, 1% higher in trade. Let's take a break. We talk about stocks which are not holding out on the other side.